Hello, good morning and welcome. You've tuned into ET Now and you're watching Buy Now, Sell Now with me, Varun, Hiremath, and along with me, Mubina, Kapasi. Let's take a look at the quiz question for this morning. Before we do anything else, which consumer electronics category has undertaken the highest quantum of price hikes in the last quarter? Your options are wires and cables, switch gears, fans, LED TVs. Do tweet us on the ET Now handle, and if you are one of the people who gets this question correct, you'll be featured on our channel at 11:45. Let's now take a look at the markets and how we're faring. It is a very positive day for us, and of course the US benchmarks, all three, closed at record levels yesterday. So we were set for a good day of trade. The Nifty currently is up nearly a whole percent, or 134 points, and we're approaching 14,300. The MidCap index is up over 1%. The auto index is up nearly 2%, and the banking index is up 0.6%. The action really doesn't end there. There's a lot of positive momentum in the market today. You look at the small cap index as well, up over 1%. Let's look at the financial services index. They're doing fairly well as well. The IT index up 2.24%. The media index up nearly 4%. So top performer today is the media index. We have the realty index as well. Currently, that's up 2.2%. And it doesn't really matter where you look today. We have an ocean of green, and it's pretty rare that we see that. All your indices today are trading firmly in the positive. Just quickly, in terms of the top gainers and losers on the Nifty, UPL's really made a strong comeback, crossing 500 rupees today. Eicher Motor, BPCL, TechM, and a Wipro, so two IT heavyweights as well. And then on the cool-off, you have Bharti Airtel, which has done phenomenal as of late. We have Titan as well, Nestle India, HDFC, and Hindalco. These are your top losers on the Nifty. But back to you, Mubina.
All right, Varun, thanks for that. Well, let's take a look at what are the stocks that we are focusing on Buy Now, Sell Now in our BNSN Cloud segment. So here's a list of all the stocks. IDFC Limited, this after Abacus and others have purchased a stake in the company. So this one's going to be an interesting one to watch out for. Biocon's unit, Biocon Biologics, has got a 555 crore rupee infusion from ADQ. This essentially values Biocon Biologics at more than $4 billion. So that's going to be in focus as well. Bharat Rasayan has said that the company will be considering a buyback when it meets on the 12th of January. We also do have Phoenix Mills, which has given an update. They've spoken about how collections have improved since, of course, the mall has reopened slowly and steadily. TCS, of course, on the back of the earnings, which are expected to be announced today, mostly post 6 p.m. Tata Power will as well be in focus. There is the Kerala order. Additionally, it also acquired a 51% stake in TP Southern Odisha Distribution and Western Odisha Distribution too. Interglobe Aviation, we have Morgan Stanley, which has an overweight stance on the counter. Aviation, remember, as a pack has been a very interesting one, especially given the constant flummox that the sector has been put in the midst of. And then we also do have a Kotak Bank. All these are brokerage recommendations, but for Kotak Bank, we have CLSA, which has downgraded the stock. The reason behind this is essentially that, yes, it has been one of the best credit underwriters. But they do say that the value accretive acquisition largely seems priced in, and the valuations are demanding now, and they are factoring any potential, high growth. For Strides, of course, we have Aditya Puri joining in as a consultant. So this is a high power name. And then Union Bank, which has its capital raise plans on its annual. So that as well is another counter on our BNSN Cloud. Well, let's take a look at TCS. Meantime, it's going to be kick-starting, as always, the third quarter earnings season. Investors will be looking at positive commentary coming in from the IT bellwether. Of course, estimates are also suggest that the market is expecting a robust performance despite a seasonally weak quarter. So dollar revenue is seen growing by 3.5% sequentially, rupee revenue by 3%. The margins are seen slightly trimming at 25.5% versus 26.2%, and we are expecting expecting the bottom line figure to come in at 8,600 crore rupees. There is going to be a cross-currency, tailwind of sorts of 30 to 40 basis points, and the compression that one can expect in the EBIT margins will be largely, due to wage hike. So watch out for that. TCS does not usually give any guidance as such of, what FY21 or even FY22 for that matter holds in store. But, we had NASSCOM speaking about how tech could do as a whole. And I think largely for now, tech seems to be in a good space. These big guys especially seem to be in a good space. So this is something that we'll be watching out for. Mr. Rajesh Gopinathan as well had said as much in an interview to ET Now that, double-digit growth is very much possible, and they will in fact strive to achieve that. So that's TCS for you. Don't forget to tune in today at 6:30 p.m. when the MD and CEO will be addressing the press on the back of their third quarter numbers.
So as earnings season is upon us, and of course it's kicking off with IT, and we will be hearing from Infosys and Wipro very shortly after this. Market veteran Ajay Srivastava remains bullish on the IT companies and says it will give valuable returns in the long run. Let's listen in.
The digital revolution is just beginning. It's just the beginning in America, and that runs. Look at our banking industry, payment industry, fintech, consumer. You can't even imagine what still has to happen to the world on the technology side. And these companies are there to deliver. And they give cash. And the best part, they give cash back to the shareholders. Not like ITC, where you go and build monuments for yourself in the hotels which make no money. The guys have spent so much money making monuments. Here, TCS says, take the money every year. Infosys says, 85% of revenue earnings, I give you dividend back. What better thing you want if you're a good quality investor? Just buy, take your dividend, do your buyback, and no trouble in these companies.
Okay, that was of course Ajay Srivastava on his view on IT, and it's very rare to see someone who's contrarian on IT right now. So let's see TCS earnings today. All eyes will definitely be on that one as we kick off earnings week. But let's talk technicals and fundamentals on our show here. Kunal Bothra and Shaina Mukaddam, both our experts, are with us. Good morning. Thanks for taking up the time. Great to have you on BNSN. Kunal, coming to you first. If you look at what's happening globally right now, there's talk of the interest rate regime perhaps changing, the dollar strengthening. Are you sensing a change from growth stocks to value stocks in the near term? And what are your high risk and low risk ideas for today?
Morning, Varun. Yes, I think the texture for the globe is changing, and we've seen very good, I would say, different kind of layouts playing out for the index, for the global markets rather over the last 9-10 months. What started as more of a scare, in Feb and March 2020, has now come into more of an optimistic and a confident kind of a zone for the index, and it becomes very difficult when as a trader to try and look at so many factors, because then there is almost every day the new set of factors which are playing out. So whether it's liquidity driven market, whether it's the fundamental factors, etc. So there are so many pointers to really look out for. But the best way to try and trade and say to this market is to have a strategy which is with the market, and something which is not contrarian as such. I think as a trader, one has to respect the trend. These are fierce kind of trends which shape up on the markets, even though they last for maybe a couple of months or maybe a quarter odd or so. But the intensity in which these market trends can probably offer are far more stronger. So I think I maintain the bullish stance. Yes, you might see the index going into some bit of correction every now and then. That's possible. But then as a strategy, I think the best strategy is to try and have a trailing stop loss on the index specifically. So 14,000 now, I believe, is a good enough support, and above those levels, I would expect that the markets could remain a bit buoyant. Two buy calls which I would want to suggest at these times. First one is a buy on Maruti. I think the stock is coming back again after very strong I would say consolidation. There are two patterns which are getting formed for Maruti, and that's very rare to find. One of them is an inverse head and shoulder pattern, which of course is a bullish pattern for stock prices on charts. And the second is a bullish flag pattern. Now both of these patterns are getting formed for Maruti at the same time frame. That's on the hourly time frame chart. And whenever we've seen such kind of a pattern forming for stocks, we've seen a double breakout happening into these names. So Maruti could be an interesting bet. From a short term view, I would expect at least an 8,000 mark as a target range. Stop loss could now be tailed up higher to almost 7,600 since the stock has moved up higher. The second one, which I'm suggesting, is a bit of a high risk trade. It's about Z Entertainment. Now, a lot of the media stocks like Sun TV, etc., have done fabulously well. In fact, what has been the trend is that many of these media stocks have gone through a rally, a very sharp and a swift correction, almost a 15% correction in a matter of few days, and then a comeback again, almost like a V-shaped recovery and rally. So I'm expecting something very similar to pan out for stocks like Z Entertainment as well. So it's more of a positional play, from a multi-month time frame. Targets to be kept at 275 and stop loss at 215. We'll term this as a high risk trade.
Thank you so much, Kunal, for that. We'll get right back to you on answering our viewers' questions and queries as well. Shahina Mukaddam as well joins us now on the show. Hi, Shahina. Good morning. Take us through what are your high risk and low risk ideas then?
For the high risk idea, I will go with IEX. Basically, it is, I would just term it as high risk because, I would see that the stock has gone up a lot in the last 6 months. So there could be some volatility. But in terms of business, it has got 95% market share of the power generation trading that is there in India. And if you see globally, 30 to 40% of their, power generation is traded on the exchanges. But in India, we just have 5% of it that is traded as of now. So the expansion in market share possibility is high. Another thing is that in terms of the new products that it is introducing, like gas trading, like bulk trading, electricity volume trading, I think all these things will add to their revenues going forward. Valuations are slightly on the higher side. That is why I'm putting it as a high risk. But at the same time, I think over a period of time, maybe a year or two, I think there is a good potential for an upside from here. The second idea that I have is Tata Chemicals. There again, the stock has gone up a lot, but here what I believe is it's got the support of the Tata Group. The way they have restructured the business in the last 3 years, sold off the fertilizer business, generated a lot of cash from there, over 3,000 crores, and the way they are reinvesting this money, which is in the high growth segments like specialty chemicals, for example, they are putting in certain value-added products in their soda ash business. I think these are the businesses that will drive growth going forward. Also, in terms of soda ash itself, the core business is going to do much better going forward, given that the construction business is gaining traction. And also, as you know, glass is one of the important components in construction. So flat glass also is likely to do well for them. So I would term this as another good medium to longer term investment idea. So these would be my two wealth creation ideas for today.
Great. All right. Well, Shahina as well as Kunal, stay on with us. We'll take a very short break on the show. Don't go anywhere.
Hi, welcome back. You're still watching Buy Now, Sell Now here on ET Now. As part of our show, we've been really catching up with a lot of retail investors as well, and trying to understand how their experiences have transformed since the onset of the pandemic. And of course, there's been a huge increase in the retail participation in equities. So there are some who've actually turned a hobby into a full-time job. And you should meet Shalini Taya, the homemaker and wife of an army man who's now turned into a full-time equity trader. And she's doing quite well. My colleague Karunya caught up with her to understand the nuances of do-it-yourself trading from home and also teaching yourself how to trade from home. Let's listen in.
So basically, I always wanted to enter into the stock market, and we have a good family friend who always used to encourage me. And when lockdown started, so he again encouraged us, and I was looking for some work from home options. So everybody suggested, rather than looking for some work from home options, why don't you get into the stock market? So I started following the market from March 2020 when the lockdown started. Thereafter, within a month, I invested some money into it. So that's how my journey started. It's been almost a year now.
How did you go about learning the basics of markets, how you can operate perhaps a demat account, how you can buy and sell shares, or which is the trading or investing strategy you want to use? How did you choose and learn all that?
So first thing was that I used to follow news channels. So I randomly I started with FNOs. And which I later realized is you should not jump directly on FNOs. So which I realized very late. So I did some mistakes which helped me learn that what are you not supposed to do. And I used to follow news channel and the suggestions which they used to give. I never immediately used to follow their trades. Okay. I used to follow like how the stock is changing, and are they genuinely giving the true advice. And then gradually I started putting my money into it.
Any other research or studying the annual reports or historic trends, charts?
Yes.
Anything that you did?
One thing which has really helped me since last 1 year is I used to be updated with news reports. Suppose I have to invest in particular shares, say Tata Motors. So I always used to update myself with its news and research column.
Okay.
So I never actually followed many stocks at one time. I used to follow like 2-3 stocks, and I used to follow their news and research column particularly.
So in the last 9-10 months, ever since you've actively started trading in the equity markets, any stocks that have really worked well for you, or any experiences you'd like to share of investing?
Okay, so initially it was actually, you can say, beginner's luck, or probably there were people around me who were suggesting me what to buy and what to not buy. So it worked really well for me initially. But gradually, I think I became too confident. And I put all of my money in one stock. So whatever money I earned, I made a lot of money from IT stocks and Tata stocks.
Okay.
And whatever money I earned, I lost it just because I put all my money. I invested in one particular stock.
Okay.
So,
what was your best bet so far? You've said IT stocks, Tata companies as well. But if you have to say 1 or 2 top bets you've placed and you've made good gains, which one would be?
So any particular stock would be, I think it would be Wipro. It has given me a lot of money.
Okay.
And it has been, I think it's very lucky for me. I don't know, I have that feeling. Whenever I invest in Wipro, it gives me positive returns.
When you look back at the last several months, anything you would have done differently, any regrets or any stocks that when you look back now, you think maybe you shouldn't have experimented with or dealt with?
I wish I could go back. And yes, I think, again, I invested all my money in one stock. That was like a little overconfidence. And without any much knowledge, I was quite naive that time. And another thing is, I think I lacked discipline and patience somewhere during the whole process of investment. Discipline in a manner, patience in a manner, I never waited for the positive returns. I was too quick in, exiting the options. And discipline in a manner, I was following news regularly. Then in between, I just never used to follow. I dropped following the news and just used to play like on my luck basis.
Okay.
So every month for me was a new strategy. A few months were like I used to follow news, and the another few months I was like, let me play on my luck. So that was mainly about it. Yes.
So somebody maybe close to you, if they ask if they should also sort of enter the world of investing, the world of equity markets, what advice would you give them, or should they sort of chart their own path, or should they have a more disciplined approach and perhaps take courses?
I think I believe market it's a very good profession, but again, with a little bit of discipline and patience, yes. And you should not invest your invest all of your money into it. First, if somebody would have advised me, I would have taken this advice that you should start investing little amount of money initially rather than investing a big amount.
Okay.
So that is one thing, that is one genuine advice which I would like to give to all people, to the beginners basically, rather than putting all of their savings in stock market. They should gradually learn, and nobody can teach you, I believe. Nobody can teach you stock market. You learn from your own mistakes. So you should put little amount, like the amount of investment should be less.
Well, countless such stories really of such individuals who have used this lockdown to learn about trading and have got into the entire trading activity themselves in 2020. Okay, well, let's answer some questions and queries then that all of you DIY traders, if you could call them that, have gotten into on specific questions that you may be having on shares that you own currently or are interested in buying. So let's take on board our first question. Saket Bansal from Mumbai writes in saying, people think that TCS upside is capped in the near term. Infosys would rather play better than TCS. Is that the correct viewpoint? All right. Well, let's analyze this from both angles, as we usually do on Buy Now, Sell Now, a fundamental as well as a technical angle. Kunal, over to you on the technicals. How would you look at the sort of run-up seen in both of these counters? And do you think that one is poised to run up better than the other? Do you think there's any such, distinguishing point between these two stocks?
What time frame you're looking at, statistics can play a very funny role depending on the kind of time frame you want to monitor. So yes, if you're looking at it from the last 9 months, 10 months from the March lows, then of course stocks like Infosys has done much better. I think the stock has more than doubled from those sub 600 lows. I think 550 or 500 approximately was the low for Infosys, and the stock is now at 1300ish kind of level. So it's done quite stronger as compared to TCS. But when you have to try and compare these stocks, you have to try and compare with the entire history of the stock prices. And when you look at the history of stock prices for in comparison for both TCS and Infosys, there is hardly any better any margin of error into these kind of names comparatively. So there are phases where Infosys does extremely well. That phase could last for maybe a couple of quarters or maybe a couple of years. But then there is always a catch-up play which happens into TCS, and vice versa is the case. So I think just trying to figure out that probably TCS has underperformed and Infosys has done better, and probably Infosys could do pretty well. As I said, that these are phases which play out in stocks even within the sectors as well. I would suggest that a much better strategy and a much senior strategy could be to try and look at having couple of IT names, at least from the longer term perspective. You can probably choose one of them, maybe Infosys or TCS, depending on your risk appetite and depending on what horizon you're looking at in terms of historical returns. But I think even Wipro at current levels of 400, and especially if the stock offers any kind of a dip, could also be a good opportunity to buy.
Okay. Shahina, what about you? I mean, when we look at, from a PE or a valuation perspective, TCS definitely is a bit more, demanding. 26x, if I'm not mistaken, as opposed to an Infi or for that matter, even HCL Tech and Tech Mahindra, which are definitely much more lower, even compared to Infi. Anything that you would like to comment on in Saket's query?
I couldn't agree more, with what you have said, as well as Kunal has said, that it's difficult to pick between TCS and Infosys. There's a catch-up among, them. One, TCS, of course, is more expensive than Infosys. But after the recent buyback that has been recently closed, we are hearing again about huge dividends that are on the cards from TCS. Infosys again has a very good dividend paying policy. So I think one needs to have a portfolio of these stocks. If you take the longer term, and I have been holding TCS from a very, very long time, and it's been a phenomenal performer. So I think if you continue holding these stocks over the medium to longer term, they are very good investments. portfolio stocks as well as high dividend paying stocks. So and also going forward, I think over the next 2 to 3 years, I think tech will do very well. IT will do very well because we've had a lot of move towards digital, and these are the companies that are actually increasing their contribution of revenues from digital, and these are much higher I think contributor in terms of EBITDA margins also. So I would make a basket, and to add maybe I could add one more, HCL Tech, Wipro, as already Kunal has added. Make a portfolio of these stocks and hold it for the very long term.
Okay, Shaina, thanks for that. You're quite positive on IT and tech, clearly. Let's move forward. Our next query is from Puneet Malhotra, and he's bought 1,400 shares of Munjal Showa, which I believe is an auto ancillary player, very small, 500 crore market cap. Kunal, you know, this space is quite exciting. You've been hearing from companies like Rico Auto, this one, they've seen a bit of an uptick, and the outlook seems to be drastically improving for the next half of this year and then the first half of next year. Do you think it's worth taking a punt here?
Well, I think it's more important that, the viewer, I would say that he understands that there's been a big auto, move which has happened. The Nifty Auto Index has been one of the top performers when you look at the March lows. And then when you're looking at, such a kind of a phenomena or a return phenomena, I think it's far important to understand that, which have been the top performers in that candidate. So top performers get measured by not just the recovery from their 52-week lows or their nearest swing lows, but also the manner in which these stocks scale past about their resistances. For Munjal Show, I think a stock has done quite okayish. Just over the last 7, 8, 9 months, there has not been a very phenomenal kind of a recovery like what we've seen even for the other mid-cap names. Forget about even the auto stocks, but even compared to the other mid-cap names, it's been an okay kind of a recovery for the stock price. So I would suggest that you go back towards the large cap names on the auto packs specifically. If you're looking at something on the auto side, I'll probably suggest even Maruti or Eicher Motors at current levels. I think these stocks look fairly attractive even at current levels. And if you're looking at something on the auto Ang space, then you could look at Motherson Sumi or Apollo Tyres. I think both of these stocks, they are also looking quite strong and probably on the verge of even giving a stronger breakout in the longer term charts.
Okay, so Kunal is definitely of the view that you need to take less risk and stick with the larger players. These smaller auto guys, you don't really know how things are going to pan out. Shaina, do you concur with Kunal, or fundamentally perhaps does Munjal Showa and some of these other smaller auto companies have some upside? Because they're severely beaten down. If you look at the charts, they've not recovered anywhere close to their pre-COVID levels.
I would continue holding Munjal Showa. I totally agree with what you're saying, Varun, that these stocks have not really caught up, and a large part of it is dependent because, like for example, Munjal Showa is dependent on how Hero picks up in terms of volumes, and the two-wheeler segment is picking up. And I think over a period of time, as the economy picks up, as India opens up more, the two-wheeler space is going to pick up much faster. And Munjal Showa, if you see the balance sheet, it's a very strong balance sheet. I believe that it is a very strong player in its own space of shock absorbers and the front fork and back fork rear cushion two-wheelers for two-wheelers. So I think on the product portfolio, it's a very strong player, and I do believe that it will again touch back on its 2-year highs, which is close to 175, 180. So I would be holding the stock at current levels.
All right, so there you have it. That's a question on Munjal Showa answered. Let's take on board our next query, which we received from Twitter. Sham Karani tweets asking us which footwear stocks have upside in the short to medium term, Relaxo Footwear or Bata India. So Kunal, what's your view on the technicals? Not sure if they're comparable. They have extremely different volumes. Market cap, of course, is enormously different. What's your view on either of these counters?
A bit difficult to compare both of these stocks, but then I think when we look at the trends for stocks like Bata India, remember that this has been one stock which has not been I would say an early mover. Bata India is not something which has just about off late risen up high. The stock has a history of doing exceptionally well. I think 2009 or 2010, if I'm not wrong, the stock was just double digits, and from there on, in a period of 9-10 years, the stock went up to even 1800 or I think 1900ish kind of levels. So that's been the strong uptrend. So it was difficult. It was a bit different to see that Bata India was not participating for the first 6-7 months of the market recovery. But it's just that I think November or December is where we saw the participation coming on for Bata India. So it's a quality stock. The stock has a history of 10 years of strong price uptrend. But when you try and compare this with stock like Relaxo has surprisingly outperformed. In fact, this stock has managed to break past even above its previous long-term high. So Bata India is still struggling. It's not broken above that 1800 or 1850 mark, which is the all-time high levels, and it's still down by almost 200 rupees odd from those levels. But Relaxo, on the other hand, has managed to cross above its 52-week highs and cross and probably give almost a 10 to 15% upside from those levels. So just comparing both of these stocks, Bata India has a good long-term history, but it has underperformed in last 8-9 months. Relaxo has an average kind of a history. However, the stock has also done pretty well in the last 8-9 months. So I think it's very difficult to try and pick and choose one of them. I would suggest that if you can probably go with both of these stocks, then I believe eventually the returns could get balanced out. One of the stocks can perform very well on the short term, but the other ones can perform pretty well from a longer term view. So if your view is long term, then I would suggest that you should average out both of these stocks.
All right, Shahina, over to you then. Bata, Relaxo, one, you could call it a large cap, Bata, and then you have a Relaxo, which, is a mid to small cap company. Both the business structures are slightly different. What's your view on how, essentially both of these will play out? Which one would you sort of believe is a better investment opportunity than the other?
Current levels, Bata is in fact cheaper than Relaxo in terms of pure P multiples and valuation. And of course in size it is bigger. In terms of quality, in terms of its management quality, it is better. So I will go with a Bata if I was to invest at current levels. I think the stock has underperformed, but it has got that space to move up again. The second quarter numbers that we saw, it was already in terms of revenue, it was doing business almost 50% of its pre-COVID levels. And from what I hear now, it is moving towards 100%. It's totally catching up what it was doing before COVID. So I think that upside is there. They are doing very well in the tier 2, tier 3, tier 4 cities, in which they are opening almost about 200 stores, which I think should be a good revenue kicker going forward. Also, export market is another area where Bata is targeting and is likely to do pretty well. You have the e-com business that is doing well, which accounts for almost 10% of revenues. So if I was to pick between the two, I will go with Bata.
Okay. Thanks for that, Shaina. Let's move on to our last query for this morning. Shreyans Nahar of Chennai has written to us, and he's looking to invest in Interglobe Aviation, given that we're all ready to be vaccinated and traveling full-fledgedly very soon. But he'd like to know from a valuation standpoint if it's too expensive. So Kunal, coming to you first, I mean, nearly 70,000 crore market cap trading at 52-week high. Fuel cost is likely to rise now because crude is recovering on a daily basis. Do you think this one has more legs to go, or perhaps it'll give a better entry point a few months down the line?
I think it definitely has more legs to go on the upside. So it's not that Indigo or Interglobe Aviation managed to rise just in the last 2-3 months, where there's been too much confidence coming back into the markets. But I remember that from the June-July lows, this was one of the few stocks which managed to recover first. The first stage of rally was quite strong and vicious. It was made by very strong volumes, and then it graduated into building a decent trend for itself. So from the sub-1,000 marks, the sub-1,000 level, the stock has gradually moved up to 1,750, 1,800 levels where it's currently trading. So it's a sign that the stock has preempted, or investors had preempted the move on Indigo and managed to ride the entire trend, and that's the sign of a hallmark or for stronger quality name. So I for one believe that the long-term prospects for Indigo is quite strong. A stock which can weather the storm in such a kind of a strong fashion and come back to its 52-week highs and come very closer to its lifetime highs as well in such a stage, I think is quite exemplary. So I believe that that's a sign that the stock could continue to move up higher, longer term trend. Would suggest buy on Indigo. If you're already holding it, then I would suggest a hold.
Okay, thanks for that. Shaina, how about you? We all know it's the market leader. It's got the highest market share. It's the best run airline. But where do you draw the line? Do you concur with Kunal? You think it's got more value still to offer, or is it going to consolidate for a while?
I believe it will consolidate for a while before you see any further up move. I think the rally that had to be done has been done, at least for the shorter to medium term. Factors that I think that will keep it under check from going up further in the shorter term is, one is that crude oil prices are moving up. So I think aviation fuel costs are going to go up. And as you know, it is a major component of their cost. Secondly, you're seeing a number of new airlines come in, of course, and the competition is going to increase. So while yes, you are going to see business going up, the demand going up for seats, but at the same time, I think the prices that they can command are going to be under check. So I would, and I think valuations are expensive. It's a strong balance sheet, no doubt, and it can weather the ups and downs going forward. But I would just wait, and I would wait for dips, to actually enter the stock. And aviation gives you returns in phases, especially when crude oil prices are on the way down, not on the way up. So I would wait.
Okay. Quite interesting there. Technically, that chart is looking very attractive, but then, of course, fundamentally, you have to weigh the fact that the costs are going up and that it has just had a tremendous run as of late. But on that note, we leave our viewers to make their own decision. Thank you to both our experts for joining us. Great to get perspective on things from you. It's time for a very quick break here on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and it is 11:49. So it's time to reveal the winners of our BNSN quiz question for the day. We asked you which consumer electronics category has undertaken the highest quantum of price hikes in the last quarter. Remember that we have seen this inflationary pressure that has sort of caused a lot of companies to take price hikes in several categories. So the options that we gave you were wires and cables, switchgears, fans, or LED TVs. Well, the correct answer is wires and cables. This definitely was a tricky one. So special kudos to our winner for today for getting it right. It is Rajiv Bhutara who correctly answered this tricky question. So Rajiv, congratulations to you. And remember, folks, we come to you every day on Buy Now, Sell Now to tease your brain cells a tad bit. So tune in at 11 a.m. We'll reveal the question, and then at 11:45, the individuals who got the question right.
Okay, well, these quizzes are getting very interesting, and we're encouraging you to keep participating in them on a daily basis. Obviously, pharma sector has been in focus, and one company, Biocon Biologics, today is hogging the limelight. It's a subsidiary, of course, of Biocon, and it's received a 555 crore investment from the Abu Dhabi-based ADQ for a 1.80% minority stake in the company. What could this mean for the company, and why are they bringing on strategic investors right now? Kiran Majumdar-Shaw, of course, the executive chairperson of Biocon, had some light to shed on that. Let's listen in.
So, as we had discussed, a few sessions ago, we had indicated that we were trying to raise in excess of $300 million to basically fund our capacity expansion and R&D pipeline, which is what we've done. We have been raising funds from several reputed investors, and the last being ADQ. As you know, we are very heavily invested also in the Middle East region, and we believe that this investment also is important in the larger scheme of things. So,
you're still tuned in to Buy Now, Sell Now. And as we wind down the show, one important asset class to flag off for you, Bitcoin. It's hit an all-time high at 38,000 per unit after a frenzied rally. It went as high as 39,000, and that took the market cap of cryptocurrency Bitcoin to above $1 trillion for the first time ever in history. So that's something we just like to bring to your attention. Unfortunately, a lot of us here in India don't really participate avidly in cryptocurrencies. Perhaps this is a wake-up call, and we should. On that note, goodbye and Buy Now, Sell Now. Have a great weekend. We'll see you next week.